Okay, folks, welcome to Market Wrap. It's the 26th of September, and I'm about to lose my voice. Cold is coming on, so hopefully I'll avoid it with a bunch of vitamin C's, but we'll see what happens. I wanted to get this out quickly to you folks tonight because I know that the name of the game this evening is going to be the debates, and it should be fairly interesting. So let's kick things off with the chart of the day, which is Deutsche Bank. Daily chart, we closed down 7% on the day. We were down a lot lower at one point in time. We were down as low as 11.23. Now, I've been talking about Deutsche Bank for a long time now, and now that the stock is really beginning to give way, the financial news media are beginning to talk about it, monthly chart, and you can see that we are really breaking down now. Last month, being August, we had a bullish key reversal. We negated that bullish key reversal this month with a bullish engulfing of the prior month's move. This is some bearish stuff. Huge down volume this month. Merkel came out, made a statement that there would be no bailout for Deutsche Bank. She says that now. Wait till the global economy and stock markets are in free fall, and you'll see the pressure that's put upon her to bail them out. So she may be all full of bravado right now, but that'll all change once you see Deutsche Bank go down into the single digits. So what they say is not necessarily what they'll do. The 10-year yield. Weekly chart. Here we are, this gap down this week. So we've had 3 consecutive quarters of foreign entities selling our bonds. I don't think this has ever happened in history. Net distribution of U.S. Treasuries, yet yields are moving lower. Go figure. You would think they would head higher. So expect us to come back down, retest the breakout point. If not this week, probably next week. The VIX moved higher today, right up and into resistance. We have VIX right now at 14.50. And I mentioned in afternoon update that the VIX had pulled back from its highs, yet it did rally back to close very close to the highs of the day. So a very bullish day for the VIX. The U.S. dollar, weekly chart. So the dollar was weak, yet emerging markets and mining plays were weak as well. That's not supposed to happen. So what you're seeing is risk off. No matter what the currency relationship is, the inverse correlation is not helping the gold mining names. It's not helping emerging markets. People want risk off. So this week so far, the dollar on a weekly basis has made a new weekly low below the last week's closing price, but not lower than last week's intra-week low. So do I think that we're going to make a new intra-week low this week? Probably. And if we do, we'll retest this extreme lower band of support. If we break it, that's when I'll be looking to buy more of the gold mining names. I hope they keep pulling back with the U.S. dollar, because if we break support on the U.S. dollar, yet the gold mining names, gold, etc., pull back as well, that'll be an opportunity for us to add to our position, because we're taking advantage of a risk-off situation. And we know that the macro picture is that when the dollar breaks historical support, the probability of gold, the gold mining names moving higher, is very high. We have a head and shoulders set up on it, both a daily and weekly basis. Left shoulder, head, right shoulder. Here's your neckline right here. This 45-degree angle right here. If it breaks, it's all over. Choppy action on Stoch RSI. So let's look for that breakdown on the U.S. dollar. Hopefully we get it this week. The Dow Transports, Doji Star formation today. They bounced off of the 50-day moving average. Lower high, though. If we break down below 77.12.13, it's all over for the transports. Ultimate oscillator, lower highs, lower high on Stoch RSI. NASDAQ Composite down nearly a percentage point today, but volume was very light. Lower highs on Ultimate Oscillator, rolling over on Stokes. And keep in mind now, that we have a breakout point failure on our hands. Let's update the chart. Okay, so here you have it. We broke out above 5287.61, put it in an all-time high on the NASDAQ. What happened today? We broke back down into this trading range. We're going to retest this lower band of support. There's a good chance that we break it and move lower. The only thing that the NASDAQ has going for it right now is that down volume was very light. The S&P 500 daily chart broke down below support. Volume, though, was very light as it was on Friday. All the indicators are very, very weak, anemic. IWM gap down today. Bearish key reversal on the day. Volume, though, is light. We'll talk about the TZA in a moment when we talk about watch stocks. The banks broke down today below support. You're not hearing it yet being spoken of, but when you hear about Deutsche Bank, if it proceeds lower, especially into the single digits, you're going to hear about who has counterparty risk. And the answer is nobody knows. It's a complex world of derivatives and nobody knows. So they will sell everything. So avoid the banks right now. Okay, Platinum Metals Group, down day, no shock. All the metals took it on the chin, down 2%, threatening the lower band of support. We'll hold on to it, though. USLV broke down to fill the gap today, or nearly fill the gap today, left open by the gap up on the 21st. We had a breakout on RSI. That breakout has now failed. We are back inside of this trading range. Expect lower lows for silver. Volume was very, very light. Rolling over on Stokes. Horrible chart. Nugget, NUGT, continues to retest the breakout point. Am I concerned? Yep, yes I am. We did hold the breakout on RSI. Bearish key reversal on price. Volume, though, is very light. I can't ignore it. Rolling over, putting in lower highs and ultimate oscillator. Same thing with Stokes. So I suggest that everybody remain hedged with NUGT. NetApp, which we added to today. I mentioned that there was a breakout point failure. For new members, breakout point failure is you break out above resistance and then you roll back over and that breakout is then failed. So that's what happened today. They rallied it back and it was positive at one point in time. Then it rolled back over once again. And we closed down below critical support at 35.39. Where do we close? 35.18. Volume rose today. Good sign. Lower highs and ultimate oscillator. Rolling over on Stokes. Let's go to a 2-hour chart. The 2-hour chart, we were in a consolidation. We broke down this morning. We reversed to rally higher. Then we had a bearish key reversal. Then by the end of the day, we traded back down again below this lower band of support, which is where we closed. So the path of least resistance on both price, RSI, which broke down as well, appears to be to the downside. Volume into the close rose dramatically. Stokes, both lines on Stokes trading down below 50, bearish stuff. So we're going to remain short of NetApp. Now our position is larger. I have updated the members area. You can see the position change on the portfolio tab. Yang, daily chart. Moved higher today, gapped higher by almost 6% on the day. So we're up on this trade. Volume was good. We broke out an ultimate oscillator. Good stuff. Let's go to a 2-hour chart. All right, on a 2-hour basis, we broke out above the upper band of the declining downtrend channel. So this downtrend on a 2-hour basis is nearly done. Volume was very good, especially into the close. Now, I think that we're going to get a pullback. Normally, that's what you get. Once you get your Stokes that rally through 80, you'll get a quick pullback, just like you saw here, just like you saw here. It's the norm rather than the exception that occurs. Now, if we break down below this lower band of support and close there, well, then we're not going to be interested with adding any more to Yang just yet. However, If they rally it tomorrow morning, then it pull it back and it retests the breakout point and holds, and then you see your Stokes begin to hook back up like it did back here, then you could add more. So that's the game plan with Yang. Let's take a look at the Shanghai Composite. Okay, daily chart of the Shanghai Composite. You could see that the Shanghai took it on the chin yesterday, or overnight, I should say, and it was down over 1 3/4%. I think that the Shanghai is going to move lower. Weekly chart. Yeah, take a look at this. If we close out this week below this lower band of support, of which we are breaking right now, it's going to spell big, big trouble for the Shanghai. This is one but ugly chart, folks. Get ready for a rocky road in the coming week and weeks. This is not good if we break down on the Shanghai. And the Shanghai hasn't yet responded to our market's performance today, so I would expect that this chart's going to look worse after the Shanghai opens up. The BRZU, we closed out our position last week. Why? Hollow candlesticks. They're fairly reliable. When you see them, run when they're at the top of a trading range. So we are looking for a pullback because it's risk off, folks, right? The dollar pulled back. The BRZU had every reason to rally. It didn't. So that tells you that people are avoiding risk. Just because you are seeing the dollar break down and the market's weakened doesn't necessarily mean there's going to be a flight to safety into gold, the gold mining names immediately. And we have historic precedents for that going back to the financial crisis. The gold mining names didn't rally right away. They took it on the chin along with the rest of the market. Then they began to rally. And I would expect the same for emerging markets as well. So we'll be watching for support level to get hit on the BRZU, and we'll look to get back involved. If not the BRZU, we'll look for an emerging markets play, maybe more broadly diversified EEM, one of the two. Dust. All right, so I'm looking at this chart, daily chart of Dust. We had broken down on the 21st. We've been limping back ever since we closed right at resistance. Is it a head fake? Probably. But I am not going to ignore the fact that we are showing some strength on DUST. Note the double bottom setup here and a higher low now. Looking for a breakout on DUST. They could push it higher. And we never broke down on RSI, 2-hour chart. It's a bit extended for me to get involved with on a 2-hour basis. I don't know if I want to chase this. It's a bit speculative. And again, folks, I'm losing my voice already, so I apologize if my voice does not sound good. It's not your audio. All right, LABU. It pulled back today. I was looking for a bull flag formation. We're not going to get that. Looks like we're setting up for a pennant formation. Now, if we hold the support level, watch for some backing and filling. 52.50 being support. Where do we close? 52.61. If we break the support level, we'll probably pull back to, let's say, could be $45 per share. Volume to the downside both today and on Friday was weak, with today's volume being lighter. So this support level may hold. So I still like LABU. We would want to wait for a breakout, though. All right, the TZA daily chart. You may be asking, Bob, the TZA rallied strong into the close. Why didn't you open up a position? The reason is this. If the market truly is beginning to sell off, more often than not, what you'll get is bright green futures when you wake up. That's meant to get you all excited. That means the selling is all over. They want you to think that. Then you go running in. They call us dumb money. They expect us to go running in, thinking that we're missing the train, taking the markets up to new all-time highs, only by 10:30 to see those green futures having turned red. So don't let them fool you with the futures market. So what I think they're going to do with the TZA is they're going to drop it tomorrow morning. And if they drop it tomorrow morning, I'll look to open up a position on that pullback. Now, right now, and I'll go to an intraday chart. I'll show you what I mean in a moment, where they closed it today. But They gapped it down after the Fed announcement. They rallied it back. I'd be buying it into the close if I would have bought it at the close today. Not for me. Volume was good today, but still below average. Higher low getting put in an ultimate oscillator, looking good. Now let's take a look at a 2-hour chart. The 2-hour chart is looking good, but we still don't have a breakout. It's still within a trading range. What's the rush? And remember, the volume on the Dow Jones, NASDAQ Composite, and the IWM was all below average today. So you didn't have wholesale distribution. You had some selling. Simple as that. So we don't want to get all excited about now it's time to get short. Let's be deliberate in our approach. And I'll show you how they closed it today using a 1-minute chart. This is all panic buying into the close, rallying it up and into the third standard deviation Bollinger Band. If you've been with me for any length of time, you'll know that my thinking is that if they're rallying it up and into the third standard deviation Bollinger Band, there's a fear trade going on there. People looking to put on a hedge. I'm not going to buy into that. The probability of us seeing a pullback tomorrow morning is very likely. And even if they gap it higher, it'll reverse to fill the gap. Then we'll react. Not until then. I don't want to respond to this type of fear buying. Let's leave that for the amateur investor. We want to be a little bit more deliberate. And that's it for tonight, folks. Everybody enjoy the debate, and I will talk to you tomorrow. Be well.